Hi there, I'm Champion Trader Kevin Davey, and today we're going to talk about optimization. Is it good? Is it bad? What do you got to watch out for? Let's get started. So, talking about optimization, is it good? Is it bad? Well, my philosophy is you want to do some optimization, but it's really easy to get into that kind of icky, over optimizing curve fit realm. And you've got to watch out for that. Now, to help answer this question, I look to my workshop students who've created over 500 strategies that have worked in real time. I do a 6-month real time test, and they've passed a whole bunch of strategies, more than 500. And that's in my award winning workshop. And award winning, it's finished in second or third place the last 4 years for best trading school. And that's voted on by the readers of Technical Analysis of Stocks and Commodities magazine. Award winning course, student success, and that's why I'm going to share some of their results with you today. I'm going to share some of those secrets that I've learned from them. And again, the data source is my Strategy Factory Club, where students submit strategies. They run in real time with me monitoring them. And then if they pass a certain criteria, they get to share them. Now, obviously, not every strategy passes. Some fail. So we have this database of over 1,500 strategies that a lot of them have passed, but a bunch have failed too. And then we can draw some conclusions on what's best. So it's really neat. Now, most traders and most people who take my course understand that optimization is not your key to success. You can't optimize your way to success in trading. A lot of newer traders, though, they tend to think that's true and that's possible. So you got to watch out. If someone's told you, oh, hey, just go and optimize it and you'll get the best parameters, I'm telling you, it does not work. You've got to be intelligent about how you optimize, and that's what I'm going to discuss here. The reason why is when you optimize to the price data, right? You're trying to fit when to buy and sell to a certain price signal. And when you look at a price signal, it's noisy. There's a lot of back and forth. And the more you optimize, the more you get that noise, and you actually build trades, and your rules will be built around that noise. And that's what you want to avoid. You want to avoid trying to be too fine and too granular, if that makes sense, with how you optimize. Yeah, you might want to sell short at the beginning of this chart and buy at the end, but you don't want to have to try to anticipate every single bar, because that will be just fitting a lot of noise, because markets are noisy. They don't always trend nicely. There's a lot of back and forth. You've got to be aware of that. And like I said, the optimization tries to fit to the noise. And maybe, as an example, the thing to look at here is more of like a moving average, or this could be a momentum or something, where you avoid a lot of that high to low noise and you just focus on the actual signal. The paradox here, when you optimize more, you get a better back test, and so you have a more optimized result, and you think it's better, but really it gives you worse real-time performance, and that's what most people don't understand. So the trick is a balance, okay? You have rules, inputs, number of iterations, all the things you're doing with optimizing, they're on the left side of the scale. On the right side is that future performance. That's what you got to balance, because you don't want to have so many inputs and so many rules that your future performance suffers. And that's what most people don't realize. They think the number of iterations and rules shows up directly in the back test. And as long as the back test is good, that the strategy is good. And that's not so. Having more of those things isn't necessarily better. And a lot of times it's worse. So like I said, I've reviewed over 1,500 strategies. And I found 3 things. And I'm going to go through each of those with you. The first one is build your strategies with less than 4 optimized inputs. If you're optimizing 10 or 20 or 30 things, you're doing way too much. You're going to be way curve fit, and your future performance is not going to look good. So stick to a couple inputs. I like to use no more than 4. Now, I didn't always do that. I used to have ones that were 8, 10, something like that. What I've found over the years is less is better. And with my students in the club, I've found the same exact thing. So the fewer optimized inputs, usually the better off you are. The next one is symmetry. A lot of people get really mad about this. They say, well, hey, a market doesn't go up the same as it goes down, and stocks go up, so you should have different rules, long and short. The problem is people use that as an excuse a lot of times to overcomplicate their strategies. Well, I'm going to have different rules for long, different rules for short, and that'll make it better. Again, I've talked a lot about simplicity. So if you have the same rule for long and short, where the short's just the exact opposite of long, that's symmetry. That's a lot simpler of a system. So yeah, you give up some performance by doing that, but having symmetry a lot of times can lead to better performance in real time. Now you might say, well, what about markets that have gone up for years and years? Interest rates is a good example where for years we were in a lower interest rate market where the interest rate kept going down. So that meant the 30-year bonds, the 10-year notes, they all went up in price. So I had quite a few models that were based on that data, which was a big bull market. But I also had the symmetric rules to go short. And then guess what happened starting in 2022 when interest rates started to rise? Well, even though my system wasn't necessarily tested on a lot of bear markets, they did pretty well because they were symmetric rules and they were successful on the long side. Turned out they were also successful on the short side. So symmetry, I think, is a really good way to intelligently optimize. You limit the number of rules and conditions that way. And then the final thing is the number of iterations. I've seen people out there who discuss, hey, I got to buy a faster computer, I got to buy a supercomputer, I got to buy time at the university so I can use their super fast computer because I'm doing millions and billions of iterations. I've never seen that work well. In fact, what I've seen is if you have under 1,000 iterations or even under 100, that's what I try to do. The fewer, the better. Yeah, the back test isn't going to be as nice, but your real-time performance will be better. That's something to keep in mind. So those are 3 ways you can intelligently optimize. What do you think? Leave a comment. I'm Champion Trader Kevin Davey. Have a great day.